right here, filling the gap with a nice overbought condition. So we're going to look at relative strength index today as well. But you see NASI right here. Let's go ahead. We'll pull our 233 over right back into this extreme spike high in the NASDAQ. We've just filled the gap. We're at 3822.23. And now let's expand our chart. And again, what we'll discuss today is this RSI. So we're going to look at counter trend style of trading, relative strength index. We'll look at the construction. More importantly, we'll look at the trade signals. Okay, so here we are. RSI's overbought. This is the first thing that we want to see. Okay, so after that RSI is overbought, now we want to start combining thought processes. Where's the market relative to? That's always the first thing that we looked at. Okay, so right there, potential counter trend divergence sell in the NASDAQ against all-time highs, or not all-time highs, but recent all-time highs. What I love about this trade, again, I like trading these divergence signals at key price points and at extremes. Why is that? A, it's an extreme level. B, it increases the risk-reward ratio. So as this level sets itself up right here for structure support at the 3808s, we then spend a ton of time hanging out up here, and then boom, we drop back down, look left, RSI buried, there's the turning point. Right here, again, a retest. And it's very, very easy to determine my risk-reward ratio. The first thing I do is, as the market starts to pull back here, I ask a very simple question. If I get a buy signal at 3808, then what's a reasonable expectation for my target? Well, right back to the previous structure resistance. And what is the value of that level? 3820. Quick math says if I buy 3808s and cover at 820, I make 12 points. At $20 a point, that's 240. Again, we look at points and ticks. So I say, okay, if my reasonable reward is 12, then I can easily risk 4 points, and I produce a 1-to-3 risk-reward ratio. My unit of risk is 4. My unit of reward is 3 times that amount. And obviously, if I was trading at 545, this would have been an aggressive buy. If I was long, then I would have just attained my target 1, and now I'd be looking for a potential reversal. The only other thing to consider here is that if I buy these lows, I'm buying with the underlying trend, versus if I sell these highs, I'm selling against the trend. So this is a 233 tick counter trend buy, in a sense that the market is oversold extreme when I hit this level. But on my higher time frame, I'm trading with the underlying trend. So if I buy 2 here, I cover 1 on a retest, let the balance run. If I sell 2 here, then I'd probably take partials at 38.14, let the balance come, and look to take the balance off here. Okay, so NASDAQ sets that up nicely. Now, real quickly, I just want to address a question from one of our DST owners, longtime client, superstar, and this is really, really critical because we talk a little bit. I've got the strategy rolling over here, by the way. Friday's not that great. I've just got it rolling so we can watch the performance. Crude oil also over here, I was short looking for the gap fill. I've already taken about 250 out of that, getting ready to get stopped out on the balance. Target 1 attained right there, and then out now. So I'm going to left click close in crude oil, make sure I'm flat across the board. No gap fill yet. And then right here, trail stops will kick in. We'll go ahead and go 71.90. In fact, I'll go 72.40 and then let it run from there. Okay. So, question. I'm going to pull this chart in. Euro USD 150 tick. Now, a couple of things. On the Euro USD 150 tick, this is basically trading the DSR type strategy. Turning points, black tips, or clusters and divergence entries. So the question is, how do I determine what signals to take and not take? It's all based on your trading plan. So A, we break the signals down into 2 different areas. Number 1, we've got trend trades. Okay, and number 2, we've got counter trend trades. So the counter trend trades obviously are what we just discussed. We're trading counter to the underlying trend. Yeah, hang on one second. Let me, so trend versus counter trend. And we'll talk a little bit about this in training. But as an example, right here, beautiful chart sent, marked up. Now, first thing I want to note, right here, they've done a beautiful job of identifying the impulse and then the ABCD termination point. Okay? So the question is, are you going to use all of this data? So there's information that we use, there's neat analysis. I show the ABCD symmetrical price points to show you and to continue to teach and educate and whatever. Doesn't mean you have to use it. Okay? Market symmetry is really, really powerful, but that is more discretionary than obviously our turning point black tips and DSR levels. So if you're not using it all the time and consistently, then just take it out. Again, I want to remove anything. So when we hear about right now, Wimbledon as an example, or I'll give you another example. Time trials recently, one of the top guys in the time trial is really starting to smoke it. Fabian Cancellara has been the man for probably the last 5 to 8 years. And so you will watch these cyclists, and, you know, not to get gross, but they get so focused on heart rate and on pushing. They got the mouth wide open so they can take in as much oxygen as possible, obviously, to continue to drive the muscles. And they're slobbering all over themselves. So they'll get a close-up of the face as they cross the finish line. And you're like, man, why didn't this guy lick his lips? Literally, they are in such a zone, they don't even think about it. And tennis players, as an example, they rarely respond to any of the information coming from the crowd, you know, the movement and whatever, because they're so intensely focused on what they're doing. So with me as a trader, again, one of my biggest downsides is that I love the analytical side. I'm ADD anyway, and so I see all this information. My challenge is focusing on 1, 2, or 3 primary signals. Okay, so part of the thing here is in development of the trading plan, I've got to focus on the signals. When I'm showing the signals in real time, I want to show you, hey, here's an aggressive first test buy at a key price point. Now, do you take that trade? I don't know. That's up to you to determine, do you take it? Then I try to walk through, here's the upside to taking that signal. We're going to catch every V top or V bottom that we ever see. The downside is they have a lower winning percentage typically. Okay? So then you have to decide, okay, I like that signal because I do want to participate in V tops and V bottoms. Or, no, not me. But that is still a relevant piece of information for me to determine whether or not I want to be a buyer or seller. So here at the bottom, we have a pretty nice example. So the market's in solid decline right here. We go extreme oversold right there. We put in a potential V bottom. We go turning point black tip and then a white candle. So we build that strength of signal the same way every time. Now, do I take that signal? If yes, and it's aggressive, then I always reduce my position size. So again, gang, it's so important that you just boil this down to the most basic. It really is simple. It's not easy, but it's simple. And this is why I constantly teach in that if-then format. And right now, from a programming perspective, that all comes from there. If this, then that. If this, then that. So the black tip indicator, the RSI, all of that. If this, then that. So you say to yourself, if I get an RSI extreme, then I look for, what do you look for next? Now, if I'm long a signal right here, and this is a counter trend. So it trades either a trend or a counter trend, period, over and out. It trades either a first test aggressive or we have a double top, double bottom. There's no two ways about it. So if you decide I'm going to only trade double tops, double bottoms, then that alleviates a whole slew of trades. A, you've decided I'm a counter trend trader because you're trading double tops and double bottoms. B, you've decided that you're not going to trade first tests. So this right here is not a signal for you, it's a setup to a potential trade. Very, very critical. Now, if I bought this right here, then I follow my ROE. A, if I'm trading half of my position, how do I exit? B, if half of my position is 2 contracts, how do I manage those 2 contracts or greater? So if I normally trade a 4 lot and I bought 2, do I manage the 2, all of it off at 18 ticks? Yes or no? It's a simple question. Now again, when we're doing code, if I tell Marius, you've got to do X, I don't give him, well, you know, this or that. It doesn't work in code. Code needs to know, no, do you want to see this? Yes. When you see this, what do you want me to do? I want you to paint the bar white. Do you want it white or black? I want it white. Do you want me to give you a variable or an option to change the color to any of the colors available in this particular charting package? Yes or no? Okay? So stay out of the gray area. And the way you stay out of it, A, develop the trading plan, B, test the plan, and C, recognition. Recognize that if I'm long from here, then I get to this area, what do? Well, what does the trading plan say? And that's why in the testing, the identification of the signal is shown. So right here, we've had a bear continuation pattern, counter trend buy. Am I a counter trend trader? Yes or no? If yes, then look for signal. I'm a counter trend trader and I only trade double bottom. So this is a setup for a potential signal. Now, right here, this might be a double bottom for you, the trader. This swing low right here, 35.75. This swing low right here was a full 7 to 8 pips above it. So this may not mean a double bottom. I may need to see this price come back down and test that low within 2 ticks. If I did buy that and I'm long, then the price drives up here. Well, this is new structure low, lower high. That's a black tip turning point. That's a sell with trend. So if I'm a counter trend trader, this is not entering my setup. If I need more information about whether or not that's trend or with trend, then I simply add the big Mo. That way I remove all discretion. Now right here, I've got a double top coming in over here on the right-hand side. Do I trade the double top? Now that becomes a counter trend sell or a with trend sell, but short-term counter. Okay. Now, right there, nailed it beautifully. Continuation entry. So they've defined, here's a new structure high followed by the anticipated higher low. I get an RSI buried, my turning point, my black tip, long entry right there. Do I trade with trend? Yes or no? If yes, then take the signal. Reasonable expectation about the price coming back to this high and then possibly to that DSR. The DSR here has stopped printing because this DSR came in. Once this DSR was broken, we have no active DSR levels here. However, we do have structure. So as I look left right there, I've got a beautiful symmetrical double top, so this will be a key price point. Okay, so very, very critical that you look at, am I trading with trend, counter trend, and do I take all signals? And again, the thing that's difficult, gang, is to say, oh, geez, I was long from here, and then I took the counter trend sell right there. If I had a big Mo on here that was set to 233 periods, the big Mo would be coming in right here. So if I'm a buyer below the big Mo, this is counter trend. If I've got overbought higher low bearish divergence under the big Mo, then this could be with trend. I'm a seller and the trend is down. Okay? So really, really critical right there. Now go ahead and type in there if you have any additional questions on that. So momentum entry following stagnation. Inverted risk reward. Okay, beautiful. And then let's pull this down. Now right here, you've identified impulse, boom. So right there you've got an ABCD pattern terminating at a previous symmetrical double top. So dropping in a black horizontal line against those highs, now I know that's a key price point. Then pulling over here, your ABCD terminates at that key price point. So now I would look for overbought bearish divergence at this level. Again, that would be a counter trend sell. All right, so let's go take a look at this. Yeah, and again, you can determine, the question is, so the trend is determined by the 233 Big Mo. To remove the discretion, you absolutely can. Well, that's not a bad little move right there in the Russell. Should have had the thing on. Should have put it in the live account, you dummy. All right, so let's go take a look right here. Okay, so the Foundation series talks about identifying directional movement. The whole purpose of the higher high, higher low, new structure high, higher low, double bottom in the swing ID is to help you identify that. Now, if I'm not going to do that, so for example, is this an impulse move to a new structure high? Yes. This high took out previous swings right here. Then we make the anticipated higher low, followed by a new structure high, followed by the higher low. So as we set currently, right now, most of you would identify on track. Okay, so right there is my new structure high. You have the swing ID set on your chart for that specific purpose. So if I come in and I identify the indicator right here, I come down to the swing right here, and I set my swing to 13, which is our swing major, I'm relying on that indicator in black to tell me where my swing highs and lows are. So here's a new structure high, look left, there's a swing low. Look left, there's a swing high. So if the market breaks above and closes above here, we maintain our bull continuation pattern. Then right here, if the market breaks below, now could we break below this swing low, not take out that swing low, and still be in a bull market? In my opinion, yes. Or we can come in here and we can use the Big Mo. So if I go T2U Big Mo right here, and I set the Big Mo to a 233, 233 is a Fibonacci sequence number. Stock traders use 5200 all the time. This is set to a simple. You can use an exponential, whatever it might be. The simple exponential is not that dramatically different. So I'm going to apply it. Now I can just say, if Big Mo is white and price is greater than Big Mo, then. Okay, so right now Big Mo plots 38.15. Let's switch the value of that, and let's use an exponential moving average instead. So from 38.15, we drop, or we're going to rally actually. So you can see right there, gang, not that significant a difference. Down here, you see the trade above, close above 38.12. Let's go back to an SMA. Okay, so the EMA is going to respond more rapidly. Now, clearly, everything above this, I can say, if SMA or if the Big Mo is white, and, so look at this trade right here. That's just gorgeous. Right there, gorgeous. And on the FX side, they use a 200 greater than a 600. So you want to make sure you don't get too much info. But right there's a classic example. Now let's tighten this up and look at the number of times. Here we go, impulse, new structure high, followed by the higher low. So right there's a buy signal with trend. If I take an overbought higher low bearish divergence at that turning point black tip, if I sell them here, I'm trading against the trend. If I buy them here, I'm buying with the trend. So that might be a quick, easy way to help with that identification. So right now, we discussed selling this level right here. So if I'm short, I'm selling against a spike high or key price point. I got my extreme RSI. I got my turning point black tip. And right there's my double top. So I'd be short from 23s, looking for 5 points on the first one, let the balance run. Over here, overbought, higher low, bearish divergence. Right there. Was there a key price point? I don't know, not going to look left. But if I took the sell, then reasonable expectation. And this, gang, comes into play with basic mean reversion. Okay? And we'll talk about that in the future. I haven't done a mean reversion deal in some time. So if we took our band right here and we created standard deviation bands outside of it, you know, the base thought process is this. Markets expand, it's like a rubber band. When we get out here, we expect it to revert to the mean. Then expansion, then revert to the mean, then expansion, then revert to the mean, and so on. So standard deviation bands on top of this would set bands at 1 standard deviation, 2 standard deviations, 3. And then we go back into those times when we take a look at, okay, if a market moves 2 standard deviations from whatever it is, let's say a Keltner channel, we can do it with a Keltner, we've done it in the past, or even with the fib dots. How frequently does that occur? Not very frequent. So very infrequent for a market to move, let's say, 3 standard deviations from a Keltner. And when it does, if we get a sell signal, then we would expect that snapback or that rubber band approach and that market to revert back to the mean, snap back into the center. So in trending markets, this is very, very typical to see these long entries here. We go higher, and then finally we fail, snap back. Long entries here, new structure highs, fail, and then snap back. And again, what's common is after we've made that impulse move, so right here we've been bearish. First time back, sell them. Then here we're at a point of indecision. The markets tighten and they start to chop a little bit right here. So look at this. We're above price, impulse, boom, straight to new structure lows. There's a turning point black tip sell. Turning point black tip sell at price. I purposely put the Big Mo band on here so you can come in here and you can create a visual. Let's just say that we put it 8 ticks on either side, so 2 points on either side of the Big Mo. And I use this as a filter. I'd say if price is less than the Big Mo, then I want price to rally back into my trading band right here. And if it does that and then produces this black tip turning point right here with an extreme RSI, take the sell. So again, the thing that I try to do there is create a visual that is impossible to misunderstand. It either did or didn't trade inside. You either did or didn't have an extreme RSI. We either did or didn't get a turning point and or black tip. So right there we sell them, 38.01. Market goes against us 3 ticks or points and then rolls down right here for 6. So if I risk 5 to make 5, my scalping target 1 is hit. We did not make new structure lows here, so I would not take this, or this would be considered aggressive. Then we break above, close above, first time back into the band, and so on. Okay? Yeah, and I'll knock this out. I can, create a little strategy relatively quickly. That's a couple of hours of programming. Marius is over there saying, oh, geez, thanks a lot. Okay? So now, real quickly, let's just take this. Let's go to 1,000 tick. Less frequency when we increase our size, but it happens either way. So here we are. And again, gang, when you go back in and look at tendencies, look at the ugliness of this. This is the type of stuff that we've been trading. And again, we've all heard about it, read about it. Euro USD and all euro pairs, volatility's declined. Forex across the board, declining volatility. When there's no directional movement, obviously it's difficult to make money because there's no follow through. Any questions on that? Does that make sense to you, gang? Okay, so theory and logic. Now let's go down to the 150 tick, which is the chart we looked at previously. We're in the NASDAQ right here. And again, this we're going to see more frequency. So if you're short from that 38.22s, then, yeah. Okay, so there's the NASDAQ. Now let's go grab the mini Russell. Let's grab something that moves. And again, remember, the movement, fantastic. Yeah, that's the on-bar update. We just love the on-bar update issue with Ninja. So here we are right here. And again, you can see it's a little more difficult. Let me fatten the bars one time. But There will be impulse moves where we get this impulse move yesterday or 2 or 3 days ago. We caught this with the strategy, but you see we never pull back right here. Okay. Then you see right here more, what I want to say, more symmetrical price action, smoother price action. So there's the 150 tick. Mean reversion, this is kind of a key point right here. It's a turning point. We go from bearish, price below, to bullish, price back above. So again, I love these. And I've done strategies in the past where I create a band around the moving average, and I would come in and say, okay, if other criteria are met, then I'll tighten my RSI down to a 3-period RSI. I'll move my oversold down to 15, maybe 11. But I'll say if RSI is oversold as we pull back, buy one at the outer part of the EMA or the Big Mo band, buy the Big Mo, and buy the bottom of the band. So buy one, add one long 3. The one I add here, I cover back here, and then let the balance run as an example. And there were a ton of mean reversion and band type strategies that were out in the marketplace forever. New structure high, higher low, right here, buy them. New structure high, yes. If confirmed with the new structure high, buy them. New structure high, now we start to go, can't get back up. Can't quite get back up. Double top, mean reversion. This one, we're very cautious. Impulse, new structure low, first time back. So if I did this one here, note my Big Mo didn't go bearish. And the other thing I can note here, gang, is I can note the slope, and I can also look at the increase in the value of that slope. That's what most momentum indicators do. So you can see here, so if I'm traveling 50 miles an hour in my car, and then I determine the amount of time it takes me to go from 50 to 70, then from 70 to 90. So my momentum is decreasing from 70 to 90 more than likely. So I went from 50 to 70 in X seconds, and then I went from 70 to 90 in 1.3x. So although I'm still going 20 miles an hour faster, the momentum is decreasing. And that's what we see here. So you'll see right here, the slope right here, momentum increasing. This is what my relative momentum series does. Right here, we pull back, we start to flatten. So my slope declines. And then from here to here, I see another directional move that's basically equal to the value of this one, and yet the momentum behind that move might be lower. And then right here, the most recent. So again, the question is, what if I trade both? Is it possible to trade both? Absolutely. But you have to have it set in your mind as solidly as the names of your father, mother, brother, sister, the 2 or 3 phone numbers, your own home address. It's got to be solid there. And you have to have tested it so you have a belief about it. So right here we go, oversold, lower high, bullish divergence. If I buy this, this is a counter trend buy, right? But maybe I'll look at my Big Mo and say, you know what? My Big Mo is bullish and white, and thus I'm buying with trend. So I've just changed perspective. Then I go up here. If I sell here, this is a counter trend sell because I'm white and bullish. So either A, I only sell a 1 lot, we pull back down, now this is a with trend buy, and I trade my full 2 lot. Okay? If price is above and retraces to the Big Mo but is still not black, would you go long if all of the ROE are satisfied? 1015 NASDAQ 233. Okay, so if I use the Big Mo to identify trend, then I can simply say if Big Mo is sloping up and white, I'm bullish. If I buy in the Big Mo band, I'm buying with trend, and I'm likely to take my turning point black tip. So yeah, then the bar color right here can simply be used for color rotation. So I need to see the market retrace to the Big Mo band. I need to see an extreme oversold. And again, right there is the cluster 3. All right, so right here, the question is about this specific trade right here. So again, if I'm only using the Big Mo, here's what it probably looked like in real time. If I'm a buyer right there, then I'm buying in a bear market. So that would be counter trend. If I sell right here, price is below the Big Mo, moves up to it. There's a turning point, black tip, RSI overbought, sell them. Here, I'm looking at structure. So structure tells me, okay, now we're starting to tighten. I'm losing the slope and momentum behind my Big Mo. We just made a new structure high, higher close here. As we pull back right here, again, I love this trade, but I'm more aggressive. And obviously, as we look at it now, we know the outcome. And then here, we say, okay, now if I set my rules up, I could say if price is greater than the Big Mo, then look at the Big Mo. If the Big Mo is white, then I need to make a new structure high. How do I define that new structure high? Well, here we're saying we need a close above the swing set to 13. So this is quantifying that for me. I don't need to be determining on my own. So I remove subjectivity. Did it close above here? Yes, it did. Again, 100 out of 100 dentists agree. I could even go further and say I need a close above the prior swing, which we can write in code, by a minimum of 8 points, or 3% ATR. If that condition is met, then take the next pullback. But if I required the white, I can't buy that because my Big Mo is still bearish. Now here we make new structure highs. We do get a shot at this entry again right here at 11:30. And then here I can bring in some of my base thought process. Yeah, because look, as we look left, I've got structure. We made new structure highs, not significant. RSI buries itself here. We trade at the level and then turning point black tip. So we'd be long around 3803s. It pulls back 4 points, and then it's gone pecan. Yeah, now this is the HMA. So you can see right here the settings. 233 tick. Oh, I'm sorry, hang on. 233, channel width is 8, so that's 8 ticks on either side of the Big Mo, which is 2 points. Yeah, so you can see 3801, it'll show the value of the plot, and then it puts it above and below. That's the SMA. The EMA is going to respond sooner, but it'll also, you'll have little periods where it'll chop. So it'll go black, white, like right here. And this kind of drives the strategy crazy because literally there's black, there's white, there's black, there's white. So although we may miss some great trades, a lot of times the SMA is just the way to go. Yeah, and this is first time back, and obviously that's a beautiful trade. Here's the second time back into the channel, and you can see either here, even here we go oversold, lower high. We retest here with bullish divergence. So again, removing the discretion, this allows us to come in and take a look at that particular setup. And we can see it in all markets, all time frames. Yeah, for example, our options desk, Big Bad Rod trades the Brickwicks and basically just trades at and around the Big Mo. So we got the Big Mo set to 233 or 200. But you can see this thing will pull right back down in the Big Mo. There's the black tip, the cluster signal, gone pecan. And then just wait. And then the other signal is if price is X distance from the value of this, then take these reversal trades right here. If it isn't, I don't want this signal. We're too close to the Big Mo. I like this signal because of the distance between price and the Big Mo right there. So this is more likely to snap back, revert to the mean than this guy here. Yeah, so now let's take a look at the base theory then on the strength of signal. Yeah, let's take a quick look here. So we had a reversal signal right there in the Russell. We'll go ahead and take the scalper. It's a counter trend sell. Crude oil's rolled over a little bit. Not much else going on. Okay, yeah, I can stay on this for a second. So let's take a look right here, gang, at price action. Left click here. So in all of my trend trading teaching, TTT, we look to identify the impulse wave 1, and then I want to buy the lows at 2, buy the lows at 4. So what we look to do is identify where those lows are. Now again, this is beautiful. It comes right back down into this price point, and there are several things that we can do. So if we look at the impulse move, this guy here from the swing lows, here's impulse wave 1. White, big Mo. First time back, this is the 1 to 2 retracement, thus the buy at 2. Now, what I'm looking for here is my intention is to buy at my best point of entry with the lowest amount of risk to participate in that directional move right there. So again, basic wave analysis would be impulse wave 1, 1 to 2. Now, some of you see possibly an A, B, C inside of that 2 to 3 wave right there. Then I pull back, second time back, so this is 4. Impulse wave 1, 1 to 2. 2 to 3, 3 to 4. Buy 2, buy 4, and then done. So this right here, there's a turning point. So let's just take a quick look. Has the RSI buried itself? Yes, SOS 1. Have I gotten a turning point? Yes, SOS 2. Okay, so let's go ahead. I'll do a single contract right here, and this would be an aggressive. Why is it aggressive? I don't have a black tip, and it's the third test in this sequence of my master Mo, my big Mo. Now, we'll take a look right here. A retest of these swing highs pays the scalper, and then my protective stop is just below here. If I go back and look left and put it below structure, that'd be 9 points of risk in the NASDAQ. Not acceptable. Okay? And you can see here, we can take the low of the band even. So I could come back in and say, okay, I'm going to buy the midpoint, and then I'm going to stretch my band. Okay, instead of 8 ticks, let's make it, yeah, so let's make it 5 points, so it'd be 20 ticks. So we've just widened the value of the band. Now I can basically buy the midpoint, put my stop at the lowest point of the band minus a point. Now I'm going to use a different ATM and buy the low down here. So buy partial here if it moves like we saw previously, right here. This is just like an adverse excursion trade. Yeah, and then I can basically take the low of the band right here. Now again, let's go to the right. See, the low of the band right here is 38.1175. Add a point to it and buy it there. Yeah, now again, gang, remember, this is taking the big Mo, and we're just applying some basic theory and logic to that big Mo. We started with the thought process that we wanted to remove the discretion from the determination of whether or not we're trading trend or counter trend. Then we moved in to take a look at the big Mo and the purpose that I set these bands out here, talking about mean reversion. So now with the width of the bands are going to be set to ticks. So as I pull that big Mo up right there, this is ticks. There are 4 ticks per point in the NASDAQ. So 20 ticks is equal to 5 points. 5 points is equal to $100. So if we were in the mini Russell, I'd want to set that to maybe 8. 8 ticks is $80, $10 a tick. Yeah. And the other thing that you'll note Again, so see, now that we've kind of gone down this path, let's do this. Let's minimize this, and now let's take a look. So again, gang, look at the tendencies. So when markets are trending, if we buy the midpoint of the band with white, 1, 2, 3, then nice profits. And here we double top at that key price point, and then we roll over. We see there's no opportunity for an entry right there. I've always called that just a waterfall. It's like a waterfall. It rolls over and it's gone. So the only thing that's going to get us in that trade is a breakout or a momentum style of signal, because we don't even get back to the midpoint, and yet this is the most attractive signal for most traders. Why? A, things typically fall twice as fast as they rise in the markets. So we get in and get to targets quickly. But if I wait for the retracement, there was my first retracement. We hit target 1 at +5, and then we had another reversal. Look left. So this is a great example. Now let's just look at this, gang. Again, what do turning points look like in the market? See how it built the foundation down here, and we finally stop on this beautiful double bottom. So if we take the turning point congestion right here and we identify that, we look at time, and it's a little more difficult because it takes place overnight as well, which is not uncommon. But then we look at the size. So let's take the size of the box and just stack it here. We go 1 times the size of that consolidation box, stack it here. So we go sideways for X number of ticks, pips, or points. And then when we do finally get a directional move, we move 2 times the value of whatever that congestion was. So there we defined the congestion, and then we broke out, we went 2x. Then again, we stopped up here. Okay, tighter range right there, but this is what's common as markets start to turn. We lose the momentum. But you can see the time it took for this market to move higher, and then we gave it all back in 1/3 of the time. And again, that's not uncommon at all. Okay, so look left again. Boom, impulse, new structure low. Now there's the first time back. Second time back. So again, if I'm using my basic structure analysis, did price make a new structure low here? Yes, it did, but my big Mo is still white. So if I'm using my big Mo right here to identify trend, and I'm a buyer here, I take my scalper off, I'm still a buyer because I'm still white. And then right here we go bearish, drop this in, grab a vertical line and say, okay, right there's where it went black. So this is the black attack, bearish deal. So from this point we go new structure, low, lower, high. Is this a SOS1? Yes. So RSI's overbought, SOS1, turning point, black tip, back to back. That's a 2-bar cluster. So that's an SOS3, cluster 2, sell them. Wait a minute. We're not quite there yet. Okay, let's go over here. Aha. Now my big Mo solidly black, bearish sentiment. And right there is my turning point black tip. But wait a minute, Todd, you said to wait, make the market go back inside that trading band for filtration. Aha. So if you've chosen to use that filter, you are correct. You cannot take that sell, because everybody here can see we did not enter our sell zone or a confirmation zone, whatever you want to call it. But Todd, I just missed a beautiful signal. Exactly. That's what filters do. Filters filter out signals. And typically we try to filter out those signals that are less likely to produce a profit. So back to how I started. If I choose to trade only those signals, A, when the big Mo or master Mo is black or white, then I recognize I'm going to miss some signals like this that would have been great signals. Yeah, but the big Mo was still white. So then I go in and I try to alter the big Mo, so I could have been short right here historically. That is curve fitting. Or I can just accept the fact that I'm going to miss some great trades. So we saw that we missed both of those waterfall trades. Well, wait a minute, here was a signal. So if I want into this signal, then I can say if I get a turning point black tip or a cluster 2 sell, like we did right here, and we're not inside the band, I can take that trade, but it's aggressive. So I'm going to reduce my position size. Because the first time I see this winner, and then I curve fit my model or my entry to try to get into that trade, it's going to come here. Remember yesterday in crude oil. It's going to come here, boink, boink, sell them. I feel like a rock star. This is amazing. There's a double top with bearish divergence. Beautiful. Gone pecan. Winner. Then it'll come up. I'll sell them here. It'll roll over. It won't take out the previous swing. Then it'll pop up here and give me another turning point black tip. And now I might be getting stopped out. And then the question is, well, do I take the next sell signal? Well, yeah, your rules were to take the first trade inside, but now I feel badly because I took this sell and I shouldn't have. I just lost 5 points on a 2-lot I shouldn't have because I just knew this was going to be the next big trade, so I doubled down. And now I've got a qualified sell signal, but I'm not going to take it because fear is gripping me right now, and I've chosen not to take the trade for a potential another loss because I hate losers. And then this will be the one it'll come up and go straight south, and now you just missed a winner. It flat out happens. So if you want to use this, and again, here's a great example. Look at this, gang. Look at the distance from the moving average right there. So as these guys start to build this double, triple, quadruple top, and this RSI shows the bearish divergence, these are really nice snapback type trades. But again, look at this. Right here we go impulse, and it just goes straight north. Markets trade that way. Markets trade that way. But they trade that way very infrequently. So I've learned not to try to figure out a way other than our, this is the level 2, the fib dot strategy right here. This will get all those signals, but it also struggles when there's no trend. So that dual fib would have gotten us long right here. But our current look would not have. And then there's a great example. Now again, this is a day trading session. So there's the 233 tick. And we look back at this historically and we go, well, all we had to do was just trade the top of the band, buy the bottom of the band. And again, a couple of things. Number one, you see black to white, black to white, black to white choppiness. Number two, you see the markets can't penetrate the band and get consecutive closes above. Number three, you see no acceleration in the slope. In fact, it's moving completely sideways. Yeah, and I did create a strategy called Bandit Trader. I'm just so genius with my names, right? Bandit, bands, get it? Ha! Hang on, get myself a golf clap on that one. There we go. So yeah, it's really nice. And again, believe me, gang, I spent $2,000 developing a strategy for something similar to this. Mean reversion and so on. Does it work? Absolutely. It works when the conditions are right. Beautiful example here. Impulse, new structure high. We could say if I get 10 consecutive closes outside of the band and the band goes white, then buy the first pullback. Did we make new structure highs and higher closes here? Yes, we did. Then buy the second time back. Did we make new structure highs here? Oop, third time back, more aggressive. So there's a really nice indication right here of the classic impulse move. So let's take a look at the visual. The only thing that we're missing, gang, right here on almost the perfect directional change, we were in a bear continuation pattern, new structure low, lower high. Did we trade into the band? Yes, we did. Qualified for a sell. RSI overbought, SOS1. Same thing every time. Turning point, 2 bars later, black tip, there's a cluster 3. Sell them. Did we make a new structure low? Yes, we did. The only thing we're missing here is we didn't get a double bottom. This is a V bottom at noon and then boom, straight north. We go from bearish to bullish here. We get multiple closes above the band. And then we pull right back down. Did we get an RSI oversold? Yes, we did. SOS1, turning point, yes. Followed by a black tip within 2 bars, yes. There's a cluster 2. SOS3 buy, get long. Long from 37.86, we go straight north to 96. That's 10 points. Did a 5-point profit target get hit? Yes, it did. Second time back, buy them. So as you watch right here, let's look left. We're in a bear continuation pattern. At this point, do we know that this is the absolute lowest low? We're going to get a V bottom and rocket out of there. We have no earthly idea. Then we go here. Do we take the sell? Might be the third time down. We go here, impulse move. Multiple closes above, we go bullish. What do? Be patient. Wait for a buy signal. Pullback. There's our cluster 3. Now again, this is the next morning. We're just looking here purely at structure. Once we buy them here, we expect a retest of the previous highs, followed by the new structure high. Then we retrace. Did I get a new structure high, higher close here? Yes. Then I can look to buy the next time back. Buy 2, buy 4. Look for a retest of the previous high. New structure high. Perfect example. Now let's look left and see what led into this. So again, this is just seeing the market tendencies. So right here, we topped out. We go through to the other side. Black tip, still not there. There's my first color rotation. Now I'm in the sell mode only if I'm a trend trader. Okay? We do not make new structure lows here. Cautious. This could be a sideways trade. Then we go new structure low. Now that I've got my new structure low, let's set. First time back, sell them. So we see right here, this was the second time back. So if I sold them here, boom, out on stop. So impulse wave 1, 1 to 2, sell 2. New structure lows, sell 4. Now let's take a quick look at what this guy looks like. Yeah, so this is the double triple top. So this is exactly what we look for on the turning points. So we've seen a beautiful bull move, and then we finally get that overbought bearish divergence, symmetrical double top. Boom. They test it again, and then here, new structure low, lower high. Retest the lows, can't break. This high can't take out the prior swing. And then here, new structure low with the black big mo, first time back. So there's a great example. Now let's take, again, let's go back to the TF real quickly. Yeah, so you see right here, gang, now we're kind of chopping. So again, we're on the 233 tick. I'm going to take my horizontal. I want to be a seller against those levels if I'm counter trend. We'll tighten this down a little further. Right here, most recent swing lows. So we go to this area. There's our first time back for the morning. Actually, that's not true. Here's the 8:30 open. So right there, this would have been an aggressive entry looking for the gap to fill. We've now filled the gap. We made a new structure high, higher close. So now here's a retest. So if I sell the 1178s, I'm counter trend. If we go, boom, new structure high, we get a nice pop. Then pull back here. Second time back.